Nice. Oh, I'm Mike Briggs. This is the Real Estate and Home Improvement Show, where we bring in professionals and ask them a million questions about the market, what's going on. Today's guest is Justin Tiso. He's a loan officer. You help people get loans to buy houses. By the way, didn't the interest rates go way up and now it's not worth buying a house anymore?
No, it's always a good time to buy a house.
Yeah.
Rates have gone up dramatically since the beginning of the year, but housing is something that people are always going to need to have.
Yeah. Now I say going up. I'm halfway kidding. When I bought my first house, they were 9%.
Right. We're not there yet.
And we were happy to get that
Yeah.
at that time. So it's always a good time to buy a house. And by the way, that house, I made so much money on it over the years. It just the value kept going up and up and up. And people said, you shouldn't buy it 9%, but it was still a good buy.
I think that's one of the big things of buying a house is just the benefits of appreciation, of home ownership. Eventually, maybe you'll never have a mortgage on a house. You'll have equity built. The average wealth of someone versus a homeowner versus a renter is just dramatic over the lifespan over 30 years of owning a house.
And by the way, I'll ask you about this, but I've always heard that a regular old Joe with a day job, the only way we can build wealth is to own a house.
I mean, I think that is one of the biggest, easiest ways to create wealth is by owning a home or owning several homes. People invest in real estate, for a specific reason to get a return on their money.
Yeah, get the return. Now, let me ask you this: who should be buying a house right now? How do you even know if you qualify? What if you've been in an apartment for 10 years, you've been in $2,500 or $3,000 a month?
Well, I think that's where someone to come to talk to me, an experienced loan officer that will look through all of their documentation, somebody's income documentation, credit information, their assets. You look at all the pieces to the puzzle to see exactly what they can do to actually get pre-approved.
And I think you're saying if you don't know or you've never done it before, why not come talk to Justin and find out? It's free, right, to find out? It's
absolutely free. I think anytime's a good time to get pre-approved. You want to know, maybe there's some barriers to entry that you can, fix within your credit, or maybe there's some additional money that you'll need to save for your down payment. I think maybe that's one of the, a constant myth that people have is, I think I don't have 20% down to buy a house. Well, you don't need 20%. You can get as low as 3%. There's down payment assistance programs for, depending on your income level, that you can get in with 0% down.
Well, wouldn't it be nice to know how much you need down? So let's say they need $3,000 and they only have $1,500. Well, good. I need to save up another $1,500. It's nice to know what you need to do.
Absolutely. I try to advise all my clients, even if they're thinking of 6 months out or a year out, do the pre-approval now. It doesn't. It's not something that you're going to be charged for. We take a look at the information now, and maybe we can have you better set up in 6 months for a year, having known what we can discover now.
Right. To find out now. Interest rates may keep going up, so maybe it's time to step up and
I think that's a big thing too. If you look at renting versus owning, and although rates have gone up, there's no ceiling cap on increasing rental values.
Right.
So home ownership, at least you can fix your mortgage payment. You know that your payment's going to be a certain amount. Versus if you're renting, you're at the mercy of whatever's happening in the rental market. So your rent could be consistently going up that you can never put the cap on that.
So if you buy a house now, and 10 years from now, your payment's going to be the same. If you rent now, in 10 years, it may be doubled.
Yeah, we've seen double-digit increasing in rents in Fresno over the past several years. So, that's something that, if I'm renting a house for $2,500, that's going to be worrisome if somebody raises my rent, a couple $100 a month.
You have no control.
Absolutely.
That's right. So where should someone start? We have your phone number on the screen. Should they start by calling you?
Yeah, easiest way is just to give me a quick telephone call. We can kind of talk about, someone's individual situation, let them be able to, tell me what they're trying to achieve, and then how we can try to, best meet their financial goals.
Okay. Now, I'm a real estate broker. I'm kind of the lazier kind. Everybody wants me to show them houses, and I say, I'm not going to show you a house until you go talk to a lender. We find out if you can even buy a house, get qualified, how much house you could afford, how much payment you could afford.
Absolutely. I think unfortunately that's what a lot of people don't do, is they will come to you first and they'll say, I want to go see a house, when they should be talking to me or a lender first to find out, what you can afford. And just because we say that you're approved for X amount of dollars doesn't mean that you should be borrowing that much. Right. You borrow what you feel is comfortable within your monthly budget.
The other reason I make them go to a lender and get pre-qualified first is I show them 20 houses, they find the one, they fall in love with it. This is the one, we must have it. And they go, and it's just this much out of their price range, and it's so disappointing.
Absolutely, absolutely. And, you know, it's still right now where, you know, even with rates that have gone up since, you know, the beginning of the year, it's still a very competitive market out there. So you really want to put yourself and set yourself above and beyond all those other offers out there. So having, you know, an actual pre-approval letter, especially from a local lender, carries a lot of weight to that other listing agent who, you know, they maybe get a letter from pre-approval letter from abc.com mortgage, and, you know, they don't know who that person is. They don't know if they just generated that letter just based on what the person told them.
Right. A real live pre-approval letter is important.
Very.
Now, I'm sorry, I hammered you with a million questions, things I want to know. What, do you have anything you came here to tell us?
Oh, no, I mean, just in general, you know, we kind of hit on a lot of the things that I want to discuss, you know, more so just, you know, kind of about the approval process, just like you hit on. It's a free process to come in. It's a good time to take a look at your credit, see what you can actually afford, you know, plan out a budget. And then also, too, you know, just, you know, myself as being, you know, a local lender, I think that that's very important for a lot of people right now to be able to, you know, have a strong attachment to the community. So I really want to make sure that I'm doing as good a job as possible for all of the parties involved, for the buyer's agent, for the buyer, for the listing agent, for everybody involved in the transaction, to make sure that we do have, you know, a smooth transaction. The company that I'm with is Precision Home Loans. We're a local California-based company, and, you know, we're priding ourselves right now on our speed and our fast service. You know, we're writing offers for 21 days, closing them in 15 days, getting through the process extremely fast, really, and that's what we want to do to separate ourselves out from another offer that's coming in that it's a 30-day offer, and, you know, they're really not sure if they could even get it done in that amount of time.
That's right. Now, if you're thinking you should own a, by the way, if you're 25 or 30 years old, you got to be in a house. You got to be owning a house right now.
I mean, I think if you have a steady source of income and you're already paying, you know, hefty amount in rent, it's definitely something to at least consider and at least, you know, put that out there on the table of what your options are. And just because you're not approved today doesn't mean we don't plan and budget to get you ready in 6 months or 18 months to get it done.
Two other things I meant to ask when I heard you're coming in here. One is, I live here in the Tower District. There's a lot of waiters and waitresses. They're professionals. They've been at this job for 20 years. But every year or two, they switch to another, a different company doing the same job. Do they qualify because they switch jobs all the time?
Depending on the job, you know, in the service business, it definitely makes it a little bit more challenging because part of their income is based on tips.
Yeah.
So if they're changing jobs, typically if it's a new job, we'll need 2 years on that specific job, because I don't know if they're working at this restaurant versus this restaurant, their tips might go up or might go down. So on anything that is a variable base, like if there's commissions or bonuses or tips, typically we'll need to have at least a 2-year history on that job.
That's why you need to talk to Justin, because he knows the questions and how to find the answers and things like that.
Yeah, I've done this for 15 years now, so, you know, my experience definitely goes a long way to be able to look at someone's specific example and really gear something, a loan product for them.
Other question that I wanted to ask you, I just remembered, is let's say they have some credit cards and other things, and you look at their credit and you can say, oh, yeah, you could get qualified, but you need to get rid of this and this and this?
That's exactly what we do as part of the pre-approval process. We say, you know, maybe based on your scenario today, with all the debt that you currently have, you'd qualify for $350,000. But if we get your balances down to, you know, a little bit less or even paid off, maybe that brings the budget up to $400,000. But that's definitely part of the approval process. You know, we do things like, you know, maybe even, you know, refinancing a vehicle to get a lower monthly payment on their auto loan, so in order to free up that little bit of monthly payment in their actual budget to free up more for the mortgage.
So it's not just an approval or rejection process, it's a process to approval. You know, might be time or paying some things down,
absolutely,
or saving some more money.
It's nice when somebody comes in and, you know, we get you're pre-approved day one, but that's not always the case. There's sometimes some planning that needs to be done. You know, really methodical ways of how we need to structure this so that in 4 months' time, those debts have come down, credit's gone up, income stays the same, and we're able to get them exactly what they want.
Perfect. Well, get started with the process. Call Justin Tiso. He's a loan officer. What's the company?
It's Precision Home Loans.
Precision Home Loans, and it's kind of a local thing. You get a local guy.
Local guy, local
Justin.
company. Phone numbers on there.
Give out your phone number. I can't quite
It's
see it.
559-706-8091. Call, text, and we can get you set up.
Very good. We'll be back with. Oh, by the way, if you watch this, you didn't write down Justin's number. Call me. I'll keep it on my desk. I'll give it to you if you need the number. It doesn't end now. Anyway, thank you, Justin.
Appreciate it.
We'll be back with more Central Valley Talk right after this.